Market update at the close of the bell. Today is August 5th, 2024, and today the market got absolutely obliterated. $1.4 trillion in market cap was wiped out from the market today. This is from Unusual Whales. And what really got hit was tech the most. As you can see, the NASDAQ 100, which is mainly all tech, is down 14% in less than a month. Nvidia is down 26% in less than a month, and it's very closely following this channel that I drew weeks ago, really, when it was like right here. I believe I drew this, and it's followed it perfectly. The VIX spiked today all the way to 65. One of the largest spikes in VIX history. I believe the only higher was the pandemic in the great financial crisis. Crazy stuff going on. So, what is causing this crash? I thought this was a good post that summarizes it. One is recession fears. So on Friday, we got a report on the unemployment rate being 4.3%, up from 4.1%, and average hourly earnings dropped, non-farm payrolls dropped lower than expected. So people are finally starting to realize that the recession concerns are real, and you can really see the tides turn and the shift in the narrative now, because it used to be bad news is good news, right? So signs of interest rates dropping, the market would rip higher, but now signs of interest rates dropping, the market shooting lower. So the whole narrative has changed. We look at the probability of a Fed cut in September is now 83% chance of a 50 basis point cut, and if we go to the end of the year, it's, a majority of people think there's going to be 4 cuts of 25 basis points. Okay, so that's a full percentage point lower. We're at 5.3 now. They think by the end of the year we'll get down to 4.3. So the odds have decreased immensely. Okay, if we go back to the September cut, it's at 83% odds now, but 1 week ago it was 11%. Okay, so this switched really quick. Let's look at the yield curve. The yield curve has been uninverted for 764 days, and it finally uninverted briefly today. We can look at this on the minute chart. So this yellow line is the 0, and when it goes above that, it uninverts, and it did right here. Finally uninverted 764 days later. It inverted again after, but we did uninvert slightly. And you do see this, it'll uninvert, invert, uninvert, invert, and then it'll stay inverted for a long time. Typically during the recession, it always uninverts prior to the recession due to short-term rates lowering. And let's look at the TLT, which is 20-year bonds and greater. And you can see just in the matter of days, it has skyrocketed 8%. And this is a dramatic move for bonds. Bonds typically do not move this much. 8% in a few days is crazy. And I've been harping on the TLT. I have a lot in TLT, so happy to see this. So that's the recession fears. Fed behind the curve I talked about, and the probabilities. The AI tech bubble bursting, I'll talk about that near the end. Buffett selling the most ever. So Warren Buffett sold half of his entire Apple stake, over $50 billion worth. People see this and get scared. He's held Apple for a long time, and he now has cash holdings to a record high of $277 billion. he holds the most treasury bills out of anybody in the world, including the Federal Reserve. So he's basically taken all that cash and put it into money market mutual funds, which just invest in short-term treasury bills. So that was a main driver. BOJ, Bank of Japan, rate hike broke something. So I've been harping on this for a while, but we have a reverse carry trade happening in front of us, where this is a chart of JPY versus USD, so the yen versus the dollar. And the yen has very low interest rates, so people would borrow in yen and convert that to dollars and then invest in dollar assets like Nvidia. But now, as the Bank of Japan tightens their monetary policy and raises interest rates, starts to perform quantitative tightening, and buys back their currency, it's shooting the yen up in price versus the dollar. So that's making people's debt cost more money. They have to get more money to repay that debt, and they're losing more and more money as this goes up. So what people have to do is they have to sell out of their US assets, convert back to yen, and then pay off their debt. And as they do this, it creates a feedback cycle where this keeps going up more and more and more. So, it's gone up over 12% in about a month, which is huge for Forex. And you see that directly with Nvidia. You see them correlated almost. As people sell out of US risky assets, you see the yen go up in value. And this is the reverse carry trade. Everybody's starting to talk about this now. This is definitely having a huge impact on the markets. And Trump-Harris political uncertainty. I'm not going to talk about that because I don't want to get political. Imminent Israel-Iran war in Middle East. I thought it had a huge factor on the markets, especially on Friday, because with uncertainty brings volatility. And when there's uncertainty with war, you typically see a huge spike in the VIX, which we saw on Friday, but we really saw this morning. And I bought the VIX late last week because I could tell that when war comes, it brings volatility. And we can see here Donald Trump has said Israel is going to be attacked tonight by Iran. Iran has been threatening the past few days that they're going to attack Israel. I personally don't think that this will escalate into a world war right now. I think this is more just Iran flexing their muscles, but I don't have enough knowledge on this to really speak on it. All I know is it brings uncertainty. Uncertainty brings volatility, and a lot of times volatility sends stock prices down. So that's really a summary of what has caused this market correction. My base case is that the Iran attacks will fizzle out this week, and if they do, I think markets will rally back up. People will buy the dip, and then on Tuesday of next week, I'm really looking at these numbers. The producer price index, which is basically inflation on the producer side, and then on Wednesday we have inflation numbers, 3%. And I think both of these will come in low inflation, and people will think that interest rates are going to come down even more, which is going to send recession fears shooting up even higher. So I think if the war is not as big of a deal as I'm kind of predicting, I think markets will rally throughout the next week, and we'll get another huge crash early or to middle of next week. But that's just my predictions. That's I'll have to see how it plays out throughout the week. That's just my base case. It could definitely change. And this is not financial advice at all. This is just, how I'm interpreting the markets moving. So, until next time, Godspeed.